Hey everyone, so let's go over the supply and demand of all the futures that I'm looking into trading. So let's begin with gold and silver. So the current supply is overall stable. It's always is with gold and silver. They're highly regulated. The demand is pretty much there's high safe haven demand due to tariff uncertainty. It looks like there's more on silver than gold. And the key upcoming events to kind of anticipate is the August 1st tariffs. Obviously, it's a big thing. And my thoughts is it's basically out of limits for me due to the tariff uncertainties. And because I trade triangles, it's definitely not something I want to be looking at. So gold, in terms of technicality, it just looks perfect for the triangle. It just goes sideways. And silver is actually in a pretty nice uptrend. So not for me. I only really trade triangles. I can barely, maybe here and there, trade some short puts or short calls, but I rarely do it. Now with gold, the volatility is on the low side relatively to the previous 3 months, so it's really low right now. And if you take a look at silver, it's also pretty low. If you take a look at the previous 3 months, it's also on the low side, so it's not, out of limits for that reason as well for me. Now, if you look at the seasonality for gold for that contract, it's hard to say if it follows seasonality or not. Gold usually doesn't really follow seasonality much when there's geopolitical tensions, tariffs, really uncertain things. I would say the same thing for silver. Somewhere where silver should have been going down, it's going up right now. So the black line is basically the current price, and then the red line is the 5-year average, and then the blue line is the 15-year average. So this is it for gold and silver. Next up is copper, and the supply is overall pretty stable. Now the demand is pretty high right now ahead of the August 1st tariffs that Trump is putting on copper. So he's putting 50% import tariffs on copper. So a lot of the companies they're just trying to buy as much copper as they can. And therefore, as you'll see in a second, the price goes up. So obviously, the key upcoming events, we need to wait and see what happens on August 1st, and then see how price reacts. And therefore, it's out of limits due to the tariff uncertainties. So as you can see, the price shot up really on July 8th when Trump announced they will probably be putting 50% tariffs on copper. And since then, he confirmed that the tariffs will be going into effect on August 1st. If that's the case, price might go up, might go down. I've heard two sides of the story. I'm not sure, and obviously because I trade triangles, this is kind of outside of my limits at the moment. Volatility is, pretty high right now comparing to the previous 3 months. It's not surprising given the situation, but it's out of limits for me. And obviously, due to the tariff tensions, you do not expect copper to follow any kind of seasonality averages. So this is kind of it for copper. For natural gas, the supply is overall pretty stable. However, the demand might increase due to hot weather in the coming weeks. So as we know, July is usually the hottest month of the year, usually, depending on the area. But therefore, we expect more demand for ACs, and then in the US, 40% of the electricity production is using natural gas. So this is why demand was probably going to go up. The key upcoming events to look for are the weekly natural gas storage report, July 24th, and just overall the weather forecasts across the US. There's a 6 to 10 day estimates where you can see if the weather is hotter than expected, maybe colder than expected. Usually it's hotter than expected this season so far. And my thoughts is it might be a good opportunity in the coming weeks if we get if the price keeps moving within, if you really take a look at this, there's a pretty nice tight range, which is key, which is this one over here. So if the price keeps moving within this range, and we have some good volatility, which we do not have right now. Volatility is really all the way down, so we need way higher volatility to sell any kind of options. This might be a really good opportunity, but we have to be patient and wait for it. In terms of seasonality, it follows the 5-year average somewhat pretty nicely, and you can see on the 5-year and on the 15-year averages, the price shoots up at the beginning of August because again, there's more demand. So we'll see what sorry, we'll see what happened or what happens every year. It's a bit different. So it depends on how hot or how warm or how hot or how cold the month of August is for each and every year. So we'll see, we'll follow, and it might be a good opportunity. For the crude oil analysis, OPEC, they increased the production by 250,000 barrels per day, or BBD, in July, and therefore obviously we expect way more supply in the market. And the demand is actually expected to go down as the economy slows down. And this is per OPEC. This is not my opinion. So this is what OPEC are expecting, and they're expecting to cut down their production. Now they have their own grand plan. I'm not going to try and figure it out. I'm just kind of analyzing what we have, and based on that, try to make educated decisions. The key upcoming events is the weekly petroleum status report, July 24th, and then just there are some Middle East tensions. There, for now, they're not major, but they can definitely develop into something quite big. So just because of that, crude oil is out of limits for now, at least for me, due to the tariffs and the Middle East tensions. Now, the price has been moving quite nicely within, it is a pretty big range, but it has been moving within this range for quite a while, I think, since like 2022, give or take. So it's not too bad. However, the volatility, the C-vol is all the way down here, so obviously this is nothing that's possible to trade currently, at least unless volatility goes up. And for the seasonality, crude oil actually follows seasonality quite nicely and is expected to stay sideways until the end of the month, which again might be a good trade for some. It's not good odds for me. All the seasonality stuff, I just take it with a grain of salt. And sometimes they do kind of give you a pretty good picture, sometimes not. It depends on a year, depends on the situation. Wheat futures have a pretty stable supply overall, and the demand is actually also pretty stable overall. Now, the key upcoming events to be looking at is the crop progress report, because the harvesting will begin soon. So far, most of the crop is being labeled as a good to excellent for wheat and soybean, actually, which we will get to in a second. So that's really good news, and the weather looks pretty favorable for the harvesting and the planting. And my thoughts are it might be a pretty good opportunity closer to the end of July or the beginning of August. We'll see. There's actually one thing that kind of stops me from opening a position. So the graph looks perfect. Basically, you can go sideways. We can get a pretty good range. The thing that stops me is the volatility is really low. You can see it did go up today, and this is a Friday as I'm recording it, but it's still a bit low. We need it at least maybe at that level over here for me to be able to or be comfortable to open that position. And the wheat actually follows seasonality pretty nicely, so kind of goes up. It is expected to go up maybe a bit more and then kind of stabilize, and then it's probably gonna fall down in August. But we'll see what's going to happen. We do need better volatility to be able to open a position on wheat futures. The last but not the least is the soybean futures. The supply is overall pretty stable. The demand is actually also overall pretty stable, but it might be going up in the future due to the biofuel mandate, where there's a need to use more soybean oil in the production of biofuel. But this is not an immediate concern. This is, if the demand will increase, it will take quite some time. Because this mandate came into effect over a month ago, and really, not much has happened. So this is not an immediate threat in terms of the demand and price going up. Now, the key upcoming event is the USDA crop progress report, July 21st. It will be a Monday. It will tell us again, like on wheat futures, the condition of the crop. And currently, again, I think 70% of soybean crop is good to excellent, which is really good, better than the 1 year or 5 year average. I don't remember exactly, but it's pretty good. And my thoughts is I am currently in a position here. It's a pretty good setup in all matters, and let me show you exactly what I mean by that. So obviously, price is moving sideways. within a pretty nice range. So you can open a really nice triangle on it. And volatility is actually really, really nice as well. So I opened it when volatility was a bit lower, so somewhere over here. It went up a bit, but again, volatility is relatively on the upper side. So I don't wait for volatility to be all the way up, because it's really hard to find these trades. And usually just go when volatility is a good to excellent, same as the crop conditions. And for the seasonality, it follows seasonality perfectly, as you can see. So price went up as expected during this time of the month, which is what I was waiting for. And then volatility kind of joined up and completed the picture. And then price is expected to maybe go up a day more or go down and just kind of bounce and overall go down towards the end of July over here, which is when I intend to close the position anyway, before the August 1st tariffs. So thanks so much for watching. Hopefully this was pretty useful analysis for you. This is what I do at the end of every week, and every day obviously I look at everything and on all the news, and it's been working pretty well for me. So again, thank you so much, and you have a good weekend.